Welcome back to Investing Talk podcast. We're going to be taking a close look at JetBlue Airways today, based on a whole bunch of stuff that you sent our way.
Yeah.
You really wanted to understand what's happening with, this low-cost carrier. So
Right.
we're going to try to break it all down
Yeah, unpack the key insights.
and see what it means for anyone following the stock.
JetBlue, it was founded way back in 2000, actually, with a really interesting aim, I think. Their stated goal was to bring humanity back to air travel.
That's a bold statement.
It's a bold statement. It's interesting, too, because right away they're positioning themselves as more than just, another...
Right, just a cheap way to fly.
Yeah, just a cheap way to get from A to B.
Okay.
So that's worth noting. I mean, and they're not tiny, right? They fly all over the U.S., of course, Latin America, Caribbean, Canada, even Europe.
Yeah, they got a big network.
So, they're definitely a player. I mean, they're known for some things. Maybe you've heard of their Mint premium service, the Even More Seats.
Yeah. Those seats with the extra legroom.
Yeah, the extra legroom, exactly.
And of course they have the TrueBlue loyalty program,
Oh, gotta get those points.
for frequent flyers.
Yeah, for sure.
So let's talk about how the stock's been doing.
Yeah, let's look at...
Because I know that was part of what you were interested in. So it's been volatile over the past month or so, declining by about 13.79% as of early April here, April 2025.
Yeah.
But it did have a little bit of a jump back in January 2025, and that seemed to be driven by some positive news about some new routes they're opening and some new partnerships.
Yeah, I mean, that kind of volatility, I think, that up and down movement, it usually suggests that there's some uncertainty in the market about, how efficiently a company is running things and whether they're,
Whether they're actually making money.
if they're going to be profitable. Right.
Right, exactly.
But that little jump that we saw in January, even though it didn't last, very long,
Right.
it does suggest that investors are paying attention and they do react
They respond.
when they hear about potential growth.
Okay, all right.
So, that's worth noting.
So let's get into the nitty-gritty a little bit here and talk about the financials.
Yeah, let's look at the numbers.
Because for the quarter ending December 31st, 2024, JetBlue reported a net loss of $1.16 billion with $2.28 billion in operating revenue, but $2.66 billion in expenses.
So more going out than coming in.
Yeah. So their EBIT margin is negative.
Yeah.
And they also have quite a bit of long-term debt, $8.66 billion.
That's a lot of debt. I think the thing that really stands out to me, when we look at these numbers, is that, their revenue was actually a bit higher than expected. I mean, they came in at $2.28 billion.
Yeah.
Versus, I think the estimate was $2.24 billion.
Yeah.
But they still had this huge net loss.
Yeah.
And the EBIT margin, negative 21.3%. That really highlights that their costs are just way higher.
Much higher
than what they're bringing in.
Than they're bringing in, yeah.
And that debt, that $8.66 billion in long-term debt, that leads to a pretty high leverage ratio.
I mean, I know some people listening might not know exactly what that means.
Yeah, sorry. So leverage ratio is basically a measure of how much debt a company is using compared to its equity, and it was 6.4, which is pretty high.
Oh, wow.
Which can make it hard for them to be flexible financially.
Right, because they've got all these...
Yeah, they got these obligations.
These payments to make.
Yeah.
And for anyone listening who maybe doesn't follow this stuff super closely.
Right. EBIT margin, that's a key indicator.
Yeah, it's a really important one.
Of how profitable their core operations are.
Yeah.
Before you even factor in.
You take out the interest, take out the taxes.
Interest and taxes, yeah. Okay, so
it's really just looking at, are they fundamentally making money from their business?
Right.
From flying people around.
So we've got, some of these warning signs.
Yeah, we do.
They're not making a profit.
Right.
They have a lot of debt.
Yep.
But then on the other hand, we also mentioned they've got, they do have some positives. Like these plans to expand their routes, and they've built up a pretty good reputation for customer service, right?
Yeah, I mean, that's not insignificant, right? I mean, having a reputation for good customer service. I mean, especially in
that industry.
Yeah, that industry, yeah.
I mean, where it's so often the opposite.
Right.
People are complaining about it.
Yeah.
So if you're the one that stands out as being better, happy customers,
right.
they tend to come back. They're more or less. Yeah.
Choose you again.
And of course, if those expansion plans are executed well,
yeah,
that could create new ways for them to bring in revenues. So
look at Lilly.
It's kind of like it's a mixed bag.
It's a balancing act, isn't it?
It is.
I think that's the key question here. Can they leverage these strengths, this good reputation, these plans for growth? Can they use that to overcome
these financial
challenges that they're facing?
Yeah, because it seems like the market is reflecting that kind of
that uncertainty.
Yeah. We've seen some analysts downgrading their ratings on the stock because of these operational challenges and because of just the overall economic outlook.
Right, because the economy always plays a role.
It does. But then there is some positive sentiment around those expansion plans.
Right.
And the partnerships they're forming. Like you mentioned the one with Delta.
Yeah.
So it seems like investors are a little skeptical.
Yeah.
They're maybe not fully on board yet.
They want to see how it plays out.
They want to see some results.
Yeah, and it makes sense, right? I mean, given the financial performance.
I think the analysts are probably downgrading it because they're worried about JetBlue's ability to actually become profitable anytime soon, right?
Right.
I mean, given what the numbers look like right now,
and the headwinds they're facing,
and the fact that they're facing these headwinds, right?
Right.
But the fact that, we do see this positive reaction to the expansions of the partnerships,
right?
I think that suggests that there is a belief in their potential, in their long-term potential.
Yeah, but they got to execute.
But they absolutely have to deliver.
No, let's talk about, who they're going up against.
Okay, yeah.
Because they're playing in a space with some really big players, right?
Yeah.
You've got Delta Airlines, you've got American Airlines. These are
and big guys.
These are the huge airlines. And while JetBlue is smaller in terms of market share,
right?
Their focus on this customer service seems to give them an edge, especially
with certain travelers,
with leisure travelers on the East Coast.
Yeah. It's interesting because that's where that initial aim, to bring humanity back to air travel. I mean, that's really where it can potentially shine, right?
Right.
Because in an industry where, I mean, let's face it, a lot of people just see airlines as
commodity.
Yeah, as commodities, right. I mean, one plane's the same as the next plane.
Exactly, yeah.
Having that reputation for a better customer experience,
right,
that can be a big, big draw.
And I imagine for leisure travelers, maybe more than business travelers, that's a big deal, right?
Yeah, I think so. I mean, business travelers, they're often focused on just, getting there quickly.
Convenience.
Yeah, the schedule working for them.
The most convenient, yeah. Whereas leisure, maybe they're a little more
price sensitive,
price sensitive.
But also maybe willing to pay a little bit more if they know they're going to have a better time.
Yeah. If it's their vacation, they don't want it to be ruined by a bad airline experience.
So it seems like, their early focus on that customer service aspect has really, paid off in terms of building this positive perception.
Okay, so let's look ahead a little bit here, because they've got some things that could potentially help them going forward.
Yeah.
They're opening some new routes to Halifax and San Pedro Sula. They're planning to open some new customer lounges, and they're even going to introduce a domestic first class option in 2026. So
they're really trying to broaden their appeal, right?
I mean, sounds like it.
New routes, that means they can reach more passengers, tap into new markets,
destinations,
the lounges and the first class option.
Right.
That could attract, a more premium segment of traveler.
Right.
And just generally elevate their brand image.
Yeah.
But of course, whether these moves are actually successful, I mean, it all comes down to execution.
Right.
It depends on how much demand there is, how well they manage the costs.
How much it costs them to do it, yeah.
Because it's great to have a fancy lounge.
Right.
But if nobody's using it,
right,
or if it costs a fortune to run it,
then it's not,
then it's not really helping them.
Of course, and no conversation about the future of an airline would be complete without talking about some of the potential risks.
Yeah, absolutely.
Because there's always stuff that could happen, right?
What ways?
You've got potential changes in regulations. You've got the always present challenge of managing operational costs.
Yeah.
And the risk of an economic downturn always looms out there. So
I mean, regulatory changes can impact everything, right?
it can't.
I mean, they can change where you can fly, how much you can charge, operational costs. I mean, especially things like fuel, right? Huge. That goes up and down like a yo-yo.
And staffing costs.
Yeah, I mean, employing all the people to
run the airline.
Run the airline, yeah. I mean, all that can have a huge impact on, whether they can make a profit or not.
Yeah.
And then if the economy slows down,
people travel less.
Yeah.
And the airlines are, one of the first to feel that.
They feel it quickly, yeah.
So taking all this into account, the current overall recommendation that we're seeing seems to be a hold on the stock.
It seems prudent.
Yeah, it's like we acknowledge that there's potential there.
Yeah, there's definitely potential.
But there are also some real challenges.
But there are some serious challenges.
So it's like, maybe wait and see how things play out.
I think that's a fair assessment.
Yeah.
I mean, it recognizes the potential.
Yeah.
And the strategic direction they're trying to take.
Yeah.
But it also, it acknowledges that they've got some significant financial and operational hurdles to get over before they can really
take off, so to speak.
Before they can really soar.
So we did dig into the recent financial results a little bit more.
Okay.
And it's interesting because they did report a net loss, but the revenue is actually higher than what people were expecting. They're actually aiming for a 3 to 6% increase in revenue in 2025.
That's ambitious.
Even though they're not planning to actually fly more planes.
All right.
And they reported earnings per share of negative $0.21 for the fourth quarter of 2024, which was actually better than analysts had predicted.
Interesting.
So there's that. But then their price to earnings ratio is negative. And their debt compared to their equity is pretty high. It's at 3.34.
Yeah.
And they haven't really been generating much free cash flow.
So it's interesting, isn't it? Because you see these bright spots, right?
Yeah.
I mean, the revenue beat expectations.
Yeah.
Their per share loss
wasn't as bad as people thought it was going to be.
Wasn't as bad as people thought it was going to be, even though they still had a significant net loss, right?
Yeah.
So that could suggest that maybe they're doing some things right, in terms of managing costs.
Yeah, or maybe just demand is really high.
Or maybe demand is stronger than
people thought.
It was going to be.
But then you look at that negative PE ratio.
Which typically means that the company's not currently profitable.
Right.
And that high debt to equity ratio, and it really does underscore
that they still have some weaknesses.
That they have some fundamental financial weaknesses.
And just for people who might not deal with this stuff every day, free cash flow is basically the cash that a company generates after you account for all the money they have to spend to run the business and to invest in equipment and things like that. So it's essentially the cash that they have
available to give to investors,
to give to investors or to reinvest in the business. So
they're not really generating a lot of that,
Yeah.
Which is another sign.
Not a great sign. Yeah.
So when we look at what advantages they have,
their brand is a big one.
Yeah, their brand, and they have that low cost model,
right? Which is appealing to a lot of travelers. Yeah.
Right. Which makes them competitive.
But the competition is fierce, right?
But it's a tough business.
It is.
With
a lot of airlines out there.
Out there, yeah.
I mean, they do operate a lot of flights, over 1,000 every day.
Wow.
To 100 different destinations.
That's a big operation.
Yeah, so they do have a significant reach.
Yeah, they do.
And of course, a lot of these key trends in the industry really impact them. Like how much people want to fly, the price of fuel, changes in regulations,
right.
How reliable they are in terms of
their operations.
So
I mean, yeah, you think about it. They have this large network, right? 1,000 flights a day.
Yeah.
But so many of these factors that are going to determine their success are really outside of their control.
Not
right?
can't control the price of fuel.
You can't control the price of fuel.
You can't control what regulators do.
Yeah, yeah.
So it makes it tough, right?
Yeah, it's a tough business.
So their CEO, Joanna Garrity,
Yeah.
she's introduced a strategy called Jet Forward,
Okay.
which really focuses on growth, becoming profitable, making their operations more reliable, and controlling costs.
So really hitting all the key points.
It sounds good on paper.
Yeah, it does. It's a solid, plan.
But they're facing some pretty big risks.
They are.
Right.
Yeah.
I mean, you mentioned those losses in the antitrust cases.
God, those are good.
And the ongoing supply chain problems.
Yeah, those are major challenges.
Those are real.
Because they affect so many different parts of their business, right? I mean, first of all, just losing those antitrust cases.
Mm-hmm.
I mean, there can be financial consequences there.
Right. You got to pay fines.
Yeah, you got to pay fines. It can affect.
And it can affect what you're allowed to do.
It can affect what you're allowed to do. Yeah.
And then those supply chain problems.
Oh, that's a nightmare for an airline.
It is because
especially when it comes to things like getting aircraft parts.
Right. Yeah.
Doing maintenance.
Right.
I mean, that can lead to delays.
Right. If you can't get the parts.
You can't get the parts. Yeah. I mean, flights get canceled.
People get upset.
People get upset.
Costs go up.
Costs go up. So it's a real problem for them.
Yeah. So
and it's not just them, right? I mean, a lot of industries are dealing with those supply chain problems.
Right. Right.
But for an airline, it's particularly
acute. Yeah.
Yeah.
And then when you compare them to some of the other airlines out there, their goals for revenue growth look pretty competitive.
Okay.
But they're just not as profitable
right.
as companies like Delta and United.
And that's really the challenge for them, right?
Yeah.
I mean, it's one thing to aim for, similar revenue growth
right.
as your competitors.
Yeah.
But at the end of the day,
you got to make money.
You got to make money.
Yeah.
And that's where they're lagging behind.
Right. So it's really going to come down to how well they
execute this Jet Forward strategy.
Yeah, how well they execute that.
Yeah.
Now, we did see some recent news that the stock price actually went up by 4.42%.
Okay.
On March 24th, 2025.
Right.
And that seemed to be related to some progress they made in their labor negotiations.
Right.
And also, those strategic expansions we talked about.
Right. Yeah.
But it's interesting because some of the technical analysis out there suggests that the stock might still be heading downwards. So
mixed signals again.
Mixed signals, yeah.
I think that increase in the stock price, it probably reflects that, investors were encouraged
by those specific developments.
Yeah.
Yeah.
I mean, progress with the labor unions.
Yeah.
I mean, that can reduce uncertainty.
Right.
Reduce the risk of disruptions.
And the expansions obviously signal.
Yeah, signal potential future growth.
But then you have this.
Then they have this
bearish technical analysis.
Yeah. Which is basically
it's basically looking at patterns in the stock price.
Yeah, it's all about
trading volume,
charts, and trying to predict
where the price is going,
where it's going to go.
And so
that suggests that maybe there's some broader trends, broader market trends, maybe some underlying concerns about their financials.
They're still kind of weighing on things.
Yeah, they're still weighing on things. Yeah.
And it's important to note, that JetBlue did report a positive operating margin in the fourth quarter of 2024.
Yeah.
And they're saying that they're optimistic that they can achieve a positive margin for all of 2025. Right. Through this Jet Forward plan.
Right.
And they've also announced some new routes for the summer of 2025, and they're actually revamping Terminal 5 at JFK, which, could be a real benefit.
Yeah.
For travelers going through there.
Getting that positive operating margin.
Yeah.
I mean, that's a key thing for them, right?
Yeah.
I mean, because that essentially means they're making money.
Yeah, from their core operations.
From their core operations, yeah. So the fact that they hit that in Q4 of 2024, and they're saying they can do it for the full year 2025.
Yeah.
I mean, that shows they are making progress.
Yeah, yeah.
And the new routes.
Yeah.
And the improvements at JFK. I mean, those are
concrete steps.
Those are concrete steps.
Right.
To both enhance their network and hopefully improve the experience for their passengers.
So that recent stock price jump that we talked about, it seems like it's tied to the progress they've made on the labor front, the expansions, and just, the general optimism around this jet forward plan.
Yeah.
But you got to keep in mind those technical indicators,
right?
That we talked about, because
they're telling a different story.
You're telling a different story.
Yeah.
And it just shows how complicated it is.
Yeah.
To evaluate an airline stock right now. It's a
tough industry.
It is.
I mean, the whole industry is dealing with rising costs.
Inflation is hitting everyone.
Inflation's hitting everyone. Yeah.
Issues with air traffic control.
Right. I mean, which is...
What causes delays.
Yeah, which causes delays, which disrupts things.
Makes people unhappy.
Yeah, and then you've got, planes getting grounded because of engine problems.
Yeah.
I mean, which, can impact...
How many planes they have available.
Yeah, how many planes they have available and how much they have to spend on maintenance.
So... JetBlue is trying to become more profitable, but they're facing these
external pressures.
Yeah,
it's almost like they're trying to fly a plane,
right?
In a hurricane. They're trying to control what they can control.
But there's only so much you can do.
But there's only so much you can do when the winds are blowing that hard.
So to kind of bring it all together, you provided us with a whole range of information on JetBlue.
We covered a lot.
We did. And it really reveals, a company that clearly has this strong customer focus, and they've got some pretty strategic plans for how they want to grow.
Yeah.
But they're also navigating
significant headwinds.
Some big financial headwinds and some pretty complex operational issues.
It's a tough business.
It is. And so, you see that stock price moving up recently.
Yeah.
And that gives you a little glimmer of what